Good day, folks. I am not here to fearmonger by any metric, but China is absolutely collapsing. I mean, beyond anything anybody could have possibly expected. We got to break this down, how it might affect the US market, the Canadian markets. China's heavily integral to the rest of the global economy. We'll talk about some of these individual stocks, Tesla, the interest rate cut cycle that isn't coming as soon as people wanted it to, and it tanked a lot of companies today. In fact, if you scrolled into the markets, I mean, I'm sure you were watching them as much as I was. The volatility this morning was maddening. I mean, the market opened tanking and has been recovering, proving super strong. I mean, our markets right now have just been unbelievably strong against the backwind of what's going on everywhere else in the world, especially from a geopolitical standpoint. And I thought it was funny too, because I was watching Google this morning, and Google started the day rallying where the rest of the market was tanking. And then as soon as the market started recovering, Google started coming down. Tesla, we got to talk about as well. Tesla tanked this morning. I mean, it crashed down to about 175 before recovering to 181. We'll talk about my price points on where I'm going to buy this, my thoughts around Tesla and Google. But firstly, let's get into this China news. And if this is a conversation you'd appreciate, hit that like button, because if you take a look at the CSI 1000 index, woo, baby, we are falling from the skies. I mean, from 2022, it's almost down 50% now, but year to date, it's dropped 26%. And China is intervening in ways that the US would never be able to. First and foremost, they're cracking down on so much. We talked about this in my stream last night. They are locking up people from shorting. A lot of exchanges are no longer allowing shorts. 1 in 4 Chinese stocks were halted today, this morning. I mean, they're cracking down on social media influencers. Some premier analysts in China have been barred from posting anything on social media. CNN, I think, was barred because anyone talking negatively about Chinese stock market, you can't do it anymore. They're literally, communism is just coming down on this like crazies. They're trying to revamp what's been going on here. I mean, they basically also had this thing going on where they're releasing a lot of the issues by 50 basis points to release about $139 billion in long-term capital to the central banks. They're easing the restraints a lot sooner than the U.S. markets are. And again, I think this has a lot to do, with the fact that we saw this during the 80s in the U.S. Basically, when you get these interest rate and inflationary cycles, as soon as the economy's back breaks, that's when we do the exact opposite. That's when we start cutting rates, alleviating stress on the banks. And China is doing that right now. Heck, we even saw that Evergrande, the largest real estate company, they just got announced that, basically they're going to have to liquidate their assets and pay it back out to lenders. There is so much going on here, and eventually it's probably going to bleed over into the Western market. I mean, a lot of people complain about the strength of the US dollar, and they're like, oh, inflation. And if you live in the microcosm of the States, you're probably feeling your dollars aren't going as far. But if you went to any other country right now, do you know how strong the US dollar is? I mean, you look at the Chinese yuan here, just basically from 2013, and it has been collapsing by about 14%. If you take a look at let's take a look at the 1 year. In the 1 year, I mean, in comparison, there's about a 4 or 5% difference. So at least it's still holding fairly strong, considering the backdrop that they're currently faced with. But then you look at the Brazilian dollar. Oh my God, compared to the US dollar, the difference here is the Brazilian dollar is down 70%. So, I mean, if you live in these countries, and even in Canada, I mean, the Canadian dollar has been getting wrecked too, right? Let's just take a look here, CAD dollar chart. In comparison, if we zoom out on the 5-year here, I mean, look at this, right? This is why I put most of my money in the U.S. markets. We're down 10% just since basically 2022. So it's just you're better off as an investor just putting your money into U.S. dollars or U.S. dollar invested assets, and your rate of return is going to be exponentially higher, right? And I think people keep crapping on the U.S. economy at a time where the U.S. dollar is holding its let's just zoom out here. I mean, it's holding a high it hasn't seen in 20 years. The last time the dollar was this strong was during the dot-com era, 20 years ago, people. So crap on the U.S. dollar and the U.S. economy all you want, but it is more damn resilient against the backdrop of one of the worst economies we've experienced in literally a decade. And it is just trucking along into what will likely be the first soft landing we ever experienced. So then we got to talk about, the interest rate cut cycle, because Jerome Powell, even the Canadian economy, they're likely not going to cut rates unless we end up in China's situation, because the economy is so strong. And they don't want to do a Paul Volcker, as they call it, where you cut the rates too soon, the real estate comes flying back, the stock market jumps even higher, and then all of a sudden you get back into some more inflationary pressures. So they're going to take it slow. I don't know why people thought they would cut by May. My expectations are probably around summer, maybe fall. they don't have a rush. They're not going to rush into this. So it's going to hurt companies immensely like Tesla, right? And Tesla, I mean, dropped so dramatically this morning. And I'm just waiting to see if this thing can hit like the 160s to 150 might be my next buying point because my average cost right now is 181. So I'm not going to buy it just because it dipped down to 175. But if we get below 170 into the 160s, like I'll be a lot more enticed because I think people are missing still the big view on the auto industry because Tesla isn't the only company that's dealing with the inflationary pressures yet. Tesla's making record sales, the number one EV last year, Model 3, right? So basically, analysts have completely given up on Tesla's growth. So it's going to continue to probably hit the stock this entire year, but people are still missing that big picture that auto companies are going broke trying to do EVs. Look at Lucid's balance sheet. There's no way they're going to survive. Rivian, okay, maybe they got some good backing with like Amazon. I have some faith there, but between BYD and Tesla, like there's no other auto company competing at these price points and still being profitable. So even GM, all these auto companies like Toyota, they're shifting now away from EVs into basically hybrids because hybrids are profitable for them and they can produce them because the business model is like GM, okay, we need to make EVs. How do we do it? We do what Tesla did. We start with the most expensive model possible, like Lucid did. We need $100,000, Hummer, something that is going to sell because it's going to be high margin. We can sell it at a great price and we can utilize that money to ramp up and build out a factory that's going to be purely EV and produce profitable, maybe $40,000, $50,000 cars. They can't do that because they started too late. That's the problem. All these companies that started EVs started way too late and can't sell premium vehicles anymore. I mean, that's the luxury market too with Corvettes and Lambos and all these companies that are trying to, roll out EVs. They'd rather do hybrids because they can do it profitably. However, do you really want the problems that come with both those worlds? You got to plug in your car and fuel it up. I mean, hybrids, I get them. They were really popular. They're very fuel efficient. I know people that love them. That's great, but it just doesn't make sense when EVs are still way more efficient than hybrids. So I'm very curious to see where this goes from here, but it makes me ever more bullish. I'm buying it primarily for the robotics and self-driving because that's the cherry we're all waiting for. But in the meantime, I still think Tesla and BYD will be probably of the two most largest auto companies sometime in the next 5 to 10 years. I would not be surprised, especially when Tesla starts rolling out their next wave of growth and their cheaper modeled vehicles and whatever that's going to be or how it's going to look. But again, Google here as well. Google drops enough, I'll buy it, but I don't think Google has the potential to drop much from here. I already think it's too cheap as it is, and I got a good position in it. But if it gets down also into the 120s, 130s, gladly pick some up. But for now, we'll just keep an eye out and probably just keep buying the indexes on some pressure here. But I'd love to know what you think about all of this in that comment section below.